Hello traders, this is the Daily Pitch International Breaking News section. Today we will be discussing the GDP numbers in the US. Stay tuned to see why these numbers are very important. Hello everyone. So let's look into the economic calendar and see what do we have. Of course, as we mentioned, today we have a high impact report, which is the GDP, which is expected to be at 2.3%. Looking at previous numbers, we can see that the GDP was at 3.1%. This is the final reading for Q3 2024. And for Q4 2024, it's expected to drop to 2.3%. Why these numbers are very important to look at them? Last week, we had the Fed meeting and the summary of economic projection. As we know that the Feds decreased their forecast for 2025 GDP from 2.1% down to 1.7%. And on the other hand, they have increased their inflation expectation, and this could be a sign of stagflation or possible stagflation. Let's look a little bit about the general global economy, general idea about the US. Here you can see the interest rate, the CPI, and all the important economic data. And as we mentioned, here in the GDP, we're expecting to see a drop from 3.1% to 2.3%. Moving to the charts, let's look first at the US dollar. As we can see on the US dollar, right now the US dollar is just consolidating in this area. If we look back to November 2024, we can see that there was a strong increase in the dollar index. And of course, in November 2024, there was the elections in the US. After the President Trump won the elections, the markets were pricing in inflation, which is equal to the Feds keeping interest rates higher for longer, and this could give a boost to the US dollar. This is what happened until recently, a couple of months ago. The market started to price in recession scares, so we saw this drop. Currently, we are at a key demand area around 103, 103.2. The price is just consolidating right now, waiting for the next fundamental catalyst to see if we break above or below. Of course, if we have a better GDP numbers, we could see the DXY breaking above this level and possibly retesting the 105 level. On the other hand, if we have bad GDP numbers, this could signal recession scares, and this could put a negative pressure on the US dollar. So we could see the XY doing like this and retesting possibly the 100 on short medium term. Looking at S&P 500, let's see how this could react with the expected numbers that you are waiting for. If we have better than expected numbers, higher than forecast, we could see the S&P breaking above the 5,800 and possibly visiting the 6,000, which is a strong psychological area. If we see numbers that are lower than expected, we can see just a slight move up to the 5,800. Price action showing some kind of rejection and then trading down to 5,650. If the momentum was, the sell momentum was stronger as well, we could see price even breaking lower, doing this and retesting the 5,500. This is the expected moves we could see today. Of course, it is data dependent. The numbers will show us what we will see with SPX, DXY, and of course, other related currency pairs and indices. Thank you so much. Hopefully you enjoyed it and see you soon.